Hey everybody, this is John. Welcome to the free video. A couple of things I want to look at as wrap-ups from last week where we had the earnings class, and that is just kind of the whole idea here that if you open with a greater than expected move, you spend the next 6 trading days typically going sideways to higher. CVS is a good example of stock that's gone sideways for almost 6 trading days here. And if we look at something like Triple D, that's an example of more of something that's gone sideways to higher. Okay, and it was down today, but it's gone sideways to higher. So how does that all play out? Well, for CVS, with just the idea that the odds of it going sideways to higher over the next 6 trading days are high, we did at the time a slightly in the money put credit spread, so the 98.94, and you can see we're not at 98 yet. We've got a small profit in the trade, and of course what would be great is if over the next couple of days CVS can grind its way up above 98. Now it doesn't mean that it will, because sideways could mean it stays right here or it even goes down a little bit, but we've got some decent odds in our favor for that. Now we may want to be quick and just kind of get out of this for the small profit that we have, but I'm willing to give it another day. And then the other one that we did, and we closed this one out today, is Triple D. Now on this one, we had bought some shares of stock when it was at $14.10. You can see it's continued to rise here. And of course, we sold the $14 puts for 59 cents. Those are now worthless. That means we get to keep that money. So a nice, fairly simple, very low stress trade in Triple D. And you can see here as well a fairly nice low stress trade in Fitbit. It opened up well above its expected move. We bought shares at $14.73, flipped them today for $15.91, and then we've got a put credit spread and the put spread. At this point, they're all worthless, and we close those out today too, putting that money in our pocket on a fairly tried and true pattern post earnings after a greater than expected move. And then one of the other things that we had done with earnings, and then what was interesting about this is that after the earnings came out and it had an up move, what we noticed is that the open interest at the $80 strike, okay, was something like 20,000 contracts. It was 30,000 contracts before earnings, then it dropped to 20,000, but it was an extraordinary amount of open interest. And so we based, we wanted to hold on to some of the stock just, based on that little bit of a push, but also you can see structuring trades where in this case sold 100 of the $80 puts post earnings, simply looking for a move up to 80. And we did this on Friday of last week because the open interest there was so extraordinary. And this is something I always just call, it's just unusual, it's just unusual volume activity. And you'll see as if by magic here on Friday, Electronic Arts just kind of, traded down last Thursday, and then by magic on Friday it popped up and closed, pretty close to 80 bucks. Not exactly, but when you're looking for a pin based on something like this, you're looking for certainly a move that gets pretty close. And with options, you can do a lot with that and have a lot of fun with stuff that gets pretty close. And another example here you can see in Simper. So, Simper, if you go and look at the open interest, 13 contracts, 1 contract, 77 contracts, and then on the put side over here is like, wow, 1,500 contracts. That's crazy. Well, if you'll notice, earnings came out. We were trading at $55.31. The earnings came out, and now we're trading at $52.60 by $52.75. Lo and behold, very close to that level. So what do we do with that information? There we go, I'll actually open up the position. So what we did with that was just the idea of going like, wow, if it's going to be attracted to that $52 strike, that means it goes down. Let's just sell some at the money calls. So in this case, we sold them for $1.75. If we do open up at $52.61, give or take, then we should have pretty close to max profit on this trade right at the open. And it's important to kind of understand that that unusual options activity can be a tell as to what the stock may do next. All right, so speaking of unusual options activity, the guy that I learn all this stuff from is Chris. You guys know him in the room. He's a wealth of knowledge from his floor trading experience, from doing this for a long time and learning he's just a fountain of knowledge. And he's going to be doing a strategy class of unusual options activity. And this is going to be Tuesday, August 16th from 6 to 8 o'clock Central, followed by, on Friday, August 19th, live trading from 12 to 3. Okay, he's been doing this for 34 years. He's got a ton of stuff. He's going to be going into 6 trade setups that exploit unusual options activity, okay? And only one of those is a takeover play. And a lot of times people think like, oh, unusual activity, that means it's a takeover play. And it's not all the time. And in fact, of these 6, only one is focused on that. Exactly what you need to trade these setups. Hint, you don't need a big list of stocks. Chris's strict criteria that generates 1 or 2 high probability setups per week. And then just kind of going down the rest of the list here. I mean, just a lot of great stuff. His criteria, we just went over that. Why you must avoid the greed trade setup. Okay, what you want to do is learn to predict the chart, not focus on the takeover. When to jump on a setup and when to stand aside. Okay, that's the absolute key to long-term profitability. What unusual option activity can tell you about stock direction with uncanny accuracy. That is the stuff that I love. How to follow the same step-by-step process Chris uses to select trades for his own account. You're going to see him break down recent examples to reveal why 10 out of the last 10 trades were winners. I don't know about you guys, but that seems like a pretty decent win ratio. And he'll also lay out the strategies for swing trades and day trades, even if you have a smaller account. Okay, this is, if you're really into options, the idea of unusual activity being a tell and kind of acting as a magnet and giving you a tool as to direction is, it's unparalleled when compared to anything in terms of a technical indicator, et cetera, et cetera. A technical indicator can be great, but if the option open interest at a certain level, like say for this week's expiration, is at point A, then that technical setup is going to have to wait until point A is done and taken out, and all those options are then, you know, either expire worthless or they're closed out before the stock can move. So this stuff's important. The strategy class is only $97. If you would like to also do the live trading, the $197 includes the live trading plus a strategy class, and to me it's the no-brainer buy of the year in terms of expanding your own knowledge in the options world. All right, you guys have a great night. Simplertrading.com/canary, and we'll see you at the next update.